Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Brody Howatt, CIO of Drexel Hamilton Assets, on the show with me today. All right, Brody, welcome to the show.
Thank you, sir.
How do you think being in the military has helped you in your current career of finance?
Well, the way that I look at it is when you're dealing with finance, especially within the hedge fund industry, you need to plan. And that's what you learned within the military, is that we would go through rock drills and talked about what if someone attacked you on your right flank, what would you do? And it's the same thing when you're dealing with finance. You need the game plan. You have to be able to go through those mental reps so that when you do start to trade and something happens, you don't react off of emotion. Plus, when I look at it from especially like a portfolio manager role, you have led people before, and I've seen people before where they can run up to $200 million of their own ideas, but once they need to bring on other analysts, they start to have issues. And I've also seen it with people within portfolio managers that, especially even analysts as well, when things become very volatile, they tend to have an issue with that. And if you're talking about someone in the military, you've led someone, and for a lot of us, we've been to war and we've been shot at, and we've been, from my first day at West Point, that basic training, you've been stressed to make sure that you can think and react and not have to, at times, I've seen other guys who they can't deal with the stress.
Yeah, well, it's a little different when they shoot back. I get it.
Right.
And thank you for your service, because I understand that you were in the unit that was part of the Saddam Hussein capture, right?
Yes, that was back in December of 2003, and it was a great Christmas gift for all of us that we were pretty strung out as a unit. When that happened, that helped us get through to the end in May of 2004.
Yeah. Congratulations on the job well done. All right, now the current trend by larger hedge funds, and how's it opening the door for smaller peers?
Well, I think when you're talking about the larger hedge funds, you're seeing a lot of these guys. They may have at least 4 or 5 portfolio managers. I've seen even the larger hedge funds that have 10 portfolio managers in just one sector. So you tend to have a lot of slippage when you go into names compared to the smaller hedge funds, where we can get in and out without the slippage that you're seeing within the larger hedge funds, especially with those funds where they have multiple portfolio managers. They're tripping over each other to get ideas on, and they can tend to move stocks up to 250 to 300 basis points. With us, you're not going to see that.
Got it. Well, let's drill down a little deeper into your company. The goal and purpose of Drexel Hamilton Asset Management.
Well, with us, and I've seen it where a lot of military veterans are not given that opportunity to trade or become portfolio managers. I've seen a lot of them where they tend to be on the operational side of the house. What we're trying to do, and like we discussed earlier in terms of military veterans handling the stress, we're trying to create an asset manager where we'll have several portfolios. We have right now, which is a long-short equity fund. We would like to have multiple long-short equity funds, along with the real estate and infrastructure funds, all of those led by veterans. And my personal mandate is to have at least 80% of the workforce be veterans.
That's an admirable goal there, and I hope that you achieve it. So let me get an idea, because I've been in the investment industry since 1980 myself. Let me get an idea of the type of investments that your company is focusing on, and if you can, give me your lay of the land as it sits now.
Well, the way that we've looked at things is we're trying to find a special niche within the market. We've seen there's so many portfolio managers that are chasing the same idea, and sometimes it doesn't matter what the fundamentals mean. It really matters where the bodies lie and what the setup is, especially going into a lot of catalysts. We've seen from our perspective that we can enter into the syndicate market, secondaries and IPOs and fixed income with our diversity status as disabled veterans. One of my partners and the CEO of our firm is blind, Scott Smiley. Another one of my partners has been deployed 7 times with the Ranger Battalion and has TBI and PTSD. I have PTSD given where I was in Iraq, and we've seen that with our diversity status, we're able to get those allocations that any type of fund of the similar AUM would not be able to get. And within that, we're going to look mostly for alpha compared to beta. And especially where the tape is right now, we want to be a true alternative investment fund where you don't have to worry about where the tape is going, because we're not really making a beta bet. We're looking for alpha. And if you look at the IPO and secondary market, especially even during tough times during 2008 and 2009, you can still make a lot of money.
I get it. I get it. The outlook for micro, macro, as far as you're concerned, obviously you're in alternative spaces. That means different things to different people. Sometimes it means private equity. Sometimes it means a variety of structured investments that are outside of the alpha flow up and down for the equity markets or the futures markets, or for that matter, the foreign currency markets. What does it mean to you so the people watching the video get an idea what you're putting the money into?
Well, like I said, I mean, we're going after not only equity, but also in the debt capital markets. So, right now where we think things, you're going into elections right now, I would think that people would most likely take money off the table. And, during that time, we can shift. I mean, we have the ability, given that we're in equity capital markets and fixed income capital markets, that we can make that shift. So in terms of being alternative, we have the ability to be in not only equities, but in fixed income. So we can shift during times where we think the tape might be a little bit jittery on the equity side.
I got it. I got it. Brody, thanks for being a guest on the show. I'm so happy that you were here, and I hope to have further conversations with you about your lay of the land, what type of investments you're finding that you can harvest for your clients.
Thank you, sir. I appreciate the opportunity to explain what we're trying to do here at Drexel Hamilton.
My pleasure. You've been watching CEO Money with Michael Yorba. Thanks for joining us. Don't forget, follow us on Twitter, like us on Facebook, and subscribe to our YouTube channel.